All right, so in this video, we're going to review the last few days of trading since last Friday. It's the 11th of June today, 2025. I'm going to show you some textbook setups uh, that I've taken, and I'll show my C trader where I've actually taken those trades. But there's some textbook liquidity grabs that I'd like to share with you, things that I look for before I look for the pattern in price action, things that sort of preempt whether I look a little harder at the chart or not, and all time of day, which is specific to when I trade and something you should look to incorporate in your trading strategy as well. In a future video, I'm going to show you the step by step, but in this one, I'm just going to show you exactly where the first step, basically, of what you should be looking for. So that being said, let's jump into the breakdown. What we've got is Asian sessions blue, London's red, and then New York, which I don't really trade, but that's just gives me reference for liquidity, which you'll see soon. What we've got here is 7 p.m. New York, so it's sort of starting to be when there's volume into the market for Asian session. And as you can see, we click right over into the kill zone, which is 8 p.m. New York, with a grab on liquidity above all of this. And above these highs, just a nice little wick above the bodies of these equal highs here. So we're going to mark that out there. So as you can see here, this is why I took this trade. So we have this impulsive move that came up, took the equal highs right in time of day. So this is start of the Asian session, which is, especially for AU, is a probability for either an intraday high or a daily high. So time of day is very important here. So I'm just going to write that down as a note for you. Time of day, Asia, probability for swing, high, low. And as you can see, that played out perfectly here with this impulse move, which we want to fade out once we confirm we're going against it. So these impulse moves are in a lot of ways a support and resistance. You just got to know which ones to look for and which ones to trade against. Because in a retail world, people are going to be looking at this impulse gap here, or lack thereof wicks and body closes and whatnot, which is called a fair value gap, as support to continue up. Okay, especially with these highs here for sessions. But I'll get into future videos of what's important, what to look at, what not, to see as a signature in price. So what I took here was when we get the close beyond, which was here, and then the retest. I always look for the retest. It gives you a bit of a better risk management or risk to reward. So we were in here above the high, or sometimes you can go tighten it up a little bit, and we'll get to that in future videos. But I don't like to have less than 5 pips of a stop loss anyway. It's kind of the threshold, and we're looking for a 3-to-1. Now, where you'd scale some of your price off, which is what I did, was 1-to-1 on this, just because we have a swing low here. And as you can see, we took that out. Once we close below that swing, we'd be stop at break even, but not with a wick. So I'll show you that setup on C Trader. I'll overlay it here on the screen. And then we're going to get into Monday's trade because it's another textbook setup, where we've got previous sessions, important levels of previous sessions, taking out liquidity. So we've got that there. And we've got a manipulation. That's more just the liquidity, but that would be your manipulation there. Low, come up, swing low again, more impulse, and key aspect again is this one, time of day. Look, we've clicked into Asian session here, into the 8 p.m. kill zone. Bang, manipulation taking all the liquidity of these trend lines once, twice, reaction. And why would we enter? Well, we'd enter because we have the manipulation, the impulse move to take out, which is combined with a manipulation move. The impulse move down, which is creating our resistance, which it breaks, closes above, and we're looking for the retest. Very similar signature and price, and same components, liquidity, and also hitting into the New York PM sessions, consequent encouragement, or the medium price, mid threshold zone there. So giving us a discount of that range. And then again, quite a fast to TP. You'd be 1-to-1 again, basically, of your high. Data wick is actually was my target here because we always balance that out, or a wick fill, some people call it. Raja will call it a wick fill. So we're using that component here as well. So a little bit more than a 1-to-1 there. But our ultimate target is 3-to-1. How much do you take off? We can get into all risk management in future videos, but general rule, I'd like to take off half on the 1-to-1, and then once we close above our target, we'd be at break even. So managing risk as we go. There's another trade you could have taken here, but I didn't like it just for the simple fact that we're already at highs at a premium in recent price action. And this fair value gap here is just a little bit before London, which is fine. But when we closed above it to retest, we're already at highs taking it out. There's more chance of at least a retrace to take out this liquidity. So yeah, I didn't like that one. And here's the C Trader trade as well. I'll put that as an overlay right now. All right, and then moving into yesterday. So this is current day right now. Yeah, just another textbook. We've got New York AM. As you can see, that's the indicator putting that low on there. We're in Asian session, a little bit later in Asian session, but we had a nice impulsive move that just clicked on when we were just consolidating, and then expansion right down to take out this liquidity into sort of retest, if you want to call it that, of these zones. As soon as we took that out, we had the impulse, signature and price, and then the resistance broken through, closed beyond, and then we're going back down to retest. I used fair value gap here. I'm not sure why. Maybe there's some lower time frames, sort of confluences of why I got a little bit of a better entry, but I'll show you C Trader again in a moment of why where I actually took that. So I believe it was somewhere in here. And yeah, just another, this one basically can go all the way to 3-to-1, but scaled off. Scale off would be this high, if not this high. So you're not greedy. It's more than a 1-to-1 and almost a swing. Reversal is sort of low there because it's that big impulse and it's kind of clean traffic-ish to go up to take at least this high. But 3-to-1 was nice on this one too. So there's 3 trades that are really clean, and they've just happened over the last 3 days. They happen all the time in price. It's sort of filtering out which ones to go for, which ones not to go for, different kind of markets, consolidation markets, in expansive or expansion markets. But we can break the step-by-step process of what I look for in a future video. But for now, that's the week, the previous 3-4 days, and currently 11th of June 2025. So I hope you got some value out of that. And yeah, in the future, you'll get some more sort of learnings from it, I hope. I'll add up some weekly bias videos, start of week stuff coming up in a few days for the following week. But for now, I'll catch you on the next one. Cheers.